6% is your 10-year yield right now. I will point out that the low of last year was 2.44%. So again, still off the lows hit early last year. This coming after a tough year for investors, as I was pointing out, worst year in 10 for all three major market gauges. The Dow shed 5.6% last year. The S&P was the hardest hit of those three, down 6%. The NASDAQ off only nearly 4%. Checking the global market action this morning, how are investors reacting around the world? We have a sell-off in Europe to report, although some shallow selling in Germany on the DAX. They're off 1/3 of 1%. In Asia overnight, let's look at declines across the board. The Nikkei in Japan closed for a holiday. The Hang Seng was down almost 3%. The shutdown showdown heads to the White House. President Trump has invited congressional leaders to meet today as both sides remain far from making a deal to reopen the government. We have the latest on the Democrats' plan that they will move forward with tomorrow and whether that has any shot with the president giving it a thumbs up. Meantime, drug makers welcoming the new year with higher prices. The Wall Street Journal detailing what you can expect when filling your next prescription. And Mark Zuckerberg under fire for being, well, clueless, facing backlash over his New Year's Eve post, writing that he is proud of the progress that the company made last year. And kumbaya to you two, the fallout ahead. Plus one lucky winner of $425 million. There's a single winning ticket from last night's Mega Millions drawing. We will tell you where it was sold. All of that and so much more coming up this morning. Fox Business Network Cheryl Casoni is here along with Wall Street Journal editor-in-chief Matt Murray. So good to see you.
Great to see you. Happy New Year.
Because you can see, today, Cheryl, is one day in kind of the downdraft. I am glad I've got some age on me.
Yeah,
I'm turning 50 shortly, and so I have seen, at least I have that perspective of, we all do.
Where we've been.
We know what we've seen some of this story play out before.
And by the way, it's fine on the other side of 50, just so you know.
Thank you. But what do you, I just want to get your quick thoughts on what to make as we move into 2019. There's so much to watch.
There's a lot going on. There's a lot of uncertainty picking up from last year. The market is just trying to find, I think, overall the right level right now to judge what the economy is going to do here and how to adjust overseas to the economy. We're still seeing a revaluation of tech going on. That's going to play out on the year for a while. And of course, right at the beginning, we've got this China trade discussion situation hanging over our heads. Until that's resolved one way or the other, I think there'll be a big question mark over the markets.
Yeah. And then also the Federal Reserve, I want to point out, with the criticism by the president of Jay Powell of what the Federal Reserve's been doing. My New Year's Day reading was a Wall Street Journal story about his aides are trying to arrange a sit down with Jay Powell and how that might play out. Because again, Jay Powell runs the risk of whatever meeting that you might have with the president's going to tweet about it, and will parse whatever is said to make it probably look good for the markets, because he is fixated on the market.
Yeah, he go ahead, Cheryl.
Well, I was going to say, that is the one thing that I think might turn around the China-U.S. trade negotiation story, the trade war. We've got until March 1st, right? Yeah. But the president is, to your point, Dagan, very focused on market performance. He feels that that is a barometer of his presidency. And we're in the middle of a government shutdown, right? We're in week number 2, day 12. This is a president that is, I would think, about to take some action. And China could be the turnaround story for these markets. I mean, it's affecting so much. Manufacturing data out of China, that's why you're seeing global market sell-off, global markets hitting us. So there's a lot going on.
What were you going to say about the Fed?
I think Powell's already got a problem with the president, whether they meet or not, because the president won't shut up about the Fed, so that almost anything he does can come off to some people as in reaction to it. So I don't know. My guess is what they'd really like to tell the president is just don't say anything, because he's already in that box. So I think he's already challenged. If he doesn't raise rates, if he holds right now, the risk is it looks like he's responding to political pressure.
Right, and then
if he does, he's going to get more political pressure.
Very well said. And was your first beat at the Journal covering General Electric?
No, that was
one of them.
That was one of them, yeah.
Okay, so we can talk about GE's bonds and what that means for investment-grade corporate debt, too, because I brought that up on Monday. So great to have you here.
Good to be here.
Matt. To our top story, the futures pointing to a sharply lower open this morning on weak manufacturing data out of China. This after the Dow, S&P, NASDAQ all having their worst year since 2008. Here now, joining me is Market Compass founder and CEO Amelia Boudreau. Good to see you.
Hi, good to see you too.
Nice
Good morning.
to see you. What to make of these markets going into the new year?
It's a very exciting time. Volatility is going to stay very high. It's above 35 right now on the VIX, and I don't see that coming down any. As you were referencing a few minutes ago, there's just a lot of event risk coming, which is exciting because it's going to really provide a map for investors in terms of timing the market. And we have the China trade tariff issue negotiations going on. We also have coming up the second week of January a vote in the UK on whether or not the parliament there will accept Theresa May's Brexit deal. And of course, that caused a lot of turmoil back in December. So will that be a replay, in 2 weeks' time? And then, of course, at the end of March, we have a possible hard exit, the UK leaving the European Union. And the Bank of England had put out a report in late November, a financial stability report showing what would happen if a hard exit were to occur. And they're forecasting perhaps the pound to go down to parity with the dollar. Just really destabilization across markets. We're looking at a lot of volatility.
Europe is really interesting, I think, because what really happened last year was the euro crisis kind of moved to the heart of Europe, because even beyond Brexit, you've got the situation in France right now, which is fairly delicate for the president. And even in Germany, you've got the prospect of very tentative government looming over Germany. So I would think Europe, even beyond Brexit, is going to be something you're going to have to watch pretty closely all year.
I agree. And Europe also is slowing down. We have U.S. growth starting to slow as well. And just turning back to the Fed, I know you were talking about that. The Fed is moving to a press conference at every meeting starting this year in January. And that raises the stakes for an error in communication, or perhaps the market doesn't like the communication that Powell is putting forward.
How do you think about the U.S. economy and its strength going into the new year relative to these other kind of macro global issues?
I want you to answer that, but I'll point out that the jobs report is out this Friday, even though it's a shortened holiday week. 177,000 jobs is the expectation. That would be a little bit faster. Disappointment in November with 155,000 jobs added. The unemployment rate still at 3.7%. An economy that is expected on a calendar year, expected to grow at 3% or greater, which we haven't seen since 2005.
Right. I think the turmoil we're seeing in the markets is a little overdone because, to your point, we still have, strong growth in the U.S. And to your point, Matt, it's still outperforming other economies, especially Europe. So that's good. And I think it'll ultimately, be good for the dollar. And I think there's a mismatch going on. And I know people have been talking about that, about what's happening in the equity market and how it's reacting and how it's falling, and the actual state of the economy, which really it's not bad enough to reflect the price action that's going on in equities right now.
But is the market volatility going to push the U.S. into a recession?
You read my mind. That's exactly right.
I mean, you can't ignore what's been happening. October to now has been nothing but rough.
Yeah, investors are scared. I think corporations are scared too. I think it would be tremendously beneficial if we can get an answer on the China trade negotiations. I think that will calm everybody down. But to your point, you're exactly right. I mean, once investors and consumers lose confidence in the economy, they stop spending, and that's a problem.
One of the big issues with a downdraft in the market is, would it influence almost most greatly or the investment decisions by corporate executives, because they arguably would have greater exposure to the stock market as a percentage of their wealth than maybe individual investors. And so they see this downdraft in their assets or in their investments, and then that influences their decision making in terms of investment, which has been since the tax reform.
It did well at the beginning.
Right.
It's come down a little bit. And I do think the uncertainty that's hanging over the heads of everybody is a big question. I mean, we just run through them, right? The shutdown, assuming, will be resolved one way or the other. But you've still got a lot of political drama ahead of us. You've got Brexit. You've got China. You've got the economic health outside the U.S. particularly. Consumers really were feeling the wage impact last year, which should have been good, although we saw confidence wobble a bit at the end of the year. And then behind all that, even coming in 2020, Dagan, you've got a lot of corporate debt coming due.
Yeah.
So there's just a lot of things hanging over the heads of companies right now. even in a good time.
And I think rising labor costs for companies is an issue. Maybe they're getting hit with a 1-2 for like rising prices due to tariffs and rising labor costs, and that's difficult for them.
What really triggered the beginning of this slide, and I said this on Monday, once you're in a slide, everything becomes a problem. Then you start worrying about Britain and France and China and the shutdown in Washington. But what triggered the most recent slide in the fall was the jump in longer-term interest rates. They got to, I think, on the close, 3.23%. Now we have the 10-year yield falling to an 11-month low this morning. Will this give the stock market some ballast, maybe, or is it a rock rolling down a hill at this point?
It's just tough. I mean, the market is fickle and investors are fickle. They don't like uncertainty. And so what happened in early December was that's when the yield curve inverted. And so longer yields came down.
3 and 5, but not on the 2 and the 10.
That's true, not on the 2 and the 10.
Where shorter term interest rates are higher than longer term, which
that was a bad stock market day. And now people were saying, when's the recession? Because parts of the yield curve, are inverting. And so there's no right or wrong. It's just like kind of how the market wants to read it. And right now, the market's trying to read the tea leaves in a more negative light, and that's a problem.
Give me a good jobs report, folks. Come on. Come on Friday.
Yeah, but it's, again, it's good news, it's good news, bad news. Really quick, I'm going to ask a classic Maria Bartiromo question. How do you allocate your money in these markets?
In these markets,
stocks versus fixed income, even sector allocations, just before you go?
It depends on if you're a more long-term value investor or not. If you are, I would definitely try to buy here and allocate into sectors. I would actually try to pick up some tech. I would actually try to pick up some, major U.S. corporations, staying out of the housing sector for sure. It's just that that's a more longer-term perspective. Right now, we're in a trader's market, so if you only have like a 1 or 2 month horizon, that's not going to work for you, and you should be allocating into the fixed income market.
Amelia, great to see you.
Nice to see you too.
Thank
Happy
you so
New
much.
Year, also.
Yes, exactly. Please come back much in the new year. Join us this Friday. We were talking about January the 4th. We're going to be bringing you live coverage of the December jobs report starting at 8 a.m. Eastern. And coming up, Facebook's latest firestorm. CEO Mark Zuckerberg being slammed for his tone-deaf end-of-year message. Plus, we have a winner. One lucky person gets to take home the Mega Millions $425 million jackpot. We will tell you where that winning ticket was sold next. The family of an American being held in Russia is speaking out. Lauren Simonetti has more. Good morning, Lauren.
Hi, Dagan. Good morning. 48-year-old American Paul Whelan has been detained in Russia on espionage allegations. His twin brother says Paul is not a spy and was in Moscow for the wedding of a fellow former Marine. He also says Paul traveled often to Russia and that he would never knowingly commit a crime. The State Department says it's aware of the situation and that it hasn't been able to see Whelan yet. Mark Zuckerberg is being slammed by critics for what they call a tone-deaf message, wrapping up a pretty tumultuous 2018 for the company. Zuckerberg said he was, quote, proud of the progress we've made in addressing Facebook's problems. In 2018, Facebook dealt with the Cambridge Analytica scandal, as well as revelations of its data sharing with business partners. Taking a look at shares of Facebook, they are down in pre-market trading by 2.2%, 128.20 a share. And one lucky person ringing in the new year a whole lot richer. One winning Mega Millions ticket sold in New York State. The prize is a whopping $425 million, the 8th largest jackpot in its history. Wasn't me, ladies, wasn't me.
Thank you so much, Lauren. We will see you all morning. Facebook, it's like the worst crisis management approach, I think, not in modern corporate history. But again, it's this, they stay the course with this kumbaya. We're about building a community. We're trying to right this ship, and it's just not resonating with the users.
No, and they continue to come out and say, we've solved the problems, we're on the problems, and more problems come out. They haven't really framed the message to get ahead of it. By the way, I think Wells Fargo has been in a similar situation, I would add, too, for quite some time. I would say this about Facebook. They make a lot of money still. And one thing, even with the stock being revalued, even with some of the leadership challenges, people forget they make money hand over fist. They had an incredibly successful pivot to mobile, probably the most successful pivot to mobile I could think of at a major company. And it is worth keeping in the back of your mind, even as they deal with problems and scandals, that part of what keeps Zuckerberg in a good position, I think, with his board and shareholders is business-wise, they've done well. They still do well.
But part of their success in mobile was the acquisition of Instagram, and both the founders are now gone.
Yep.
Because what I personally heard was that they didn't like the way that Zuckerberg had kind of taken over, was the direction that he was sending.
Including monetizing.
Right, and so that remains to be seen. Will Facebook somehow foul that up or reduce the growth rate at Instagram?
Absolutely. There's a lot of challenges with the company without any doubt. And part of the challenge has been a communications problem, really just sort of explaining their mission well, explaining what went wrong or what's gone wrong, continually being surprised by revelations out there. They're having their moment right now.
We're going to talk about Netflix coming up. We'll make time for that because, again, what did you just say in the break to me? Most important company?
I think the most interesting company for me right now is Netflix.
All right.
Most important.
There's your tease. And then also this, something to make you, well, angry, hot. Drug prices on the rise. We're going to tell you the companies that are deciding to raise prescription drug prices in the new year and why. Plus, Mitt Romney lashing out. The incoming senator's new op-ed slamming President Trump just a day before being sworn in as a new senator. We will discuss, to say the least, when we come back. It's the start of a new year, and it is an ugly one in the U.S. markets. Let's take a look at the futures this morning. A 324-point loss on the Dow futures, losses across the board. The NASDAQ 100 futures are down more than 2% at the moment. This as all three market gauges come off their worst year since 2008. And I'll point out that starting this year, the Russell 2000 small cap stocks and the Dow transports are in bear market territory. They are down more than 20%, both of those gauges. Kind of a good indicator of maybe the U.S. economy, down more than 20% from their recent highs. And here's an important level to watch in the S&P 500 today, 2344.60. That would be a bear market close if that's what we end up, where we end up at the close of trading this afternoon for the S&P 500. Many people are watching that because they say that if the S&P closes in a bear market, could be a tipping point into something worse. And then this, paying more for medicine in the new year. The Wall Street Journal reporting this morning, pharmaceutical company Allergan is setting the tone for 2019 with a near 10% increase in prices on more than 12 products. Allergan is among those more than 36 other drug companies that are ringing in the new year with price increases. The average price increase among companies implementing a hike, 6.3%. This comes as the Trump administration is urging big pharmaceutical companies to keep drug prices low, even suggesting drug prices be advertised on television commercials. Matt, great story in the Journal as always. It's on the front page. It's right here.
Yep.
Because that's how I read it. What's going on here? Is there an explanation for this?
Well, they raise prices every year pretty much. I think that the big thing that stood out to me in the article was generic prices are going up, and that's the kind of drugs a lot of people get, which are supposed to be a lot cheaper than the brand name drugs, and they're going up higher than the price of inflation. And I think the risk for the economy, if you're talking about the president, is even with all the progress we've made, even with the fact that wages were going up last year, you've got pocket spending, drug spending, house prices. There are little areas where there is some stress and where average people are feeling it. People who are living paycheck to paycheck can feel it. It's part of the reason probably that the president is so happy about gas prices being low. And
which he tweeted about yesterday.
He tweeted about over the weekend. Because it doesn't take that many of these kinds of things to start to crimp people's spending, even if they're feeling pretty good about things. And so this just adds to that.
But the interesting part is the why, Dagan, right?
Yeah, no, tell me why. Because, again, what's their excuse? Because they always have an excuse. Are they valid excuses?
What they're saying, obviously R&D is always the number one excuse for any drug company. It's going to cost us millions of dollars to develop these drugs. But the generics side I think was interesting. But with Allergan, I thought what was fascinating is this is the company and the CEO that led that. We're going to make a social contract with consumers. We're going to be good people, good executives, good companies. We're not going to raise, the prices on drugs across the board. And they're doing it anyway. And I think wage pressure could be part of the story. But I can tell you what, they're all saying it's R&D. And if you're going to have, even with less regulations in the drug industry that we have now under President Trump, which is a good thing, they're still ignoring the political pressure, I think, from the president. He'll be tweeting about this soon enough. And this is actually a bipartisan issue, is drug prices. We've seen that time and time again.
Well, on that note, the FDA, and I'll correct myself if I'm wrong, I think that they pushed through a record number of generic drug approvals last year, or they were on track for that.
Yeah.
So that was one way to try and lower overall drug prices. But I was looking at the Allergan numbers that the Journal uncovered that Allergan did confirm. It raised the price of 51 products, 27 by 9.5%, another 24 by almost 5%, and it uncovered more than half the drugs in its portfolio, including this all extended release version of an Alzheimer's drug, Namenda.
So, and their list prices that they're raising the price by. So the argument that they try to make is that the consumer won't necessarily feel this, and that 9% is a big number because of all the rebates that you can get, but still someone has to pay for that. It just makes me think that the whole structure here is a little confusing, because where's the transparency in what the cost of a medication is if there's all different rebates and everything that's available? The insurance company doing something, it's confusing.
Dagan's still waiting for the cost of her MRI to be made public.
But that
you've said that many times.
But we've talked about that for literally as long as I've been a financial reporter. Is the need for transparency in pricing of not just drugs but of services, so people can make decisions on their own, as we do with virtually everything else that we shop for in this world.
I think it's a great point, and I want to go back to one thing Cheryl said when you talk about the president and deregulation. We are heading right now, it's already underway, into what will be a very, very intense Democratic primary season. And even against the backdrop of the president's regulatory pullback, the Democrats are likely to be competing with each other for new regulatory measures, especially in areas like this that they think are going to resonate with voters. So the drug companies and any other company that's working with consumers has to proceed pretty carefully here right now. And by the way, the president has shown, despite his own regulatory pullback, has shown a willingness to wade into these issues himself on what he perceives to be the behalf of consumers, which adds to the uncertainty for these companies right now. So there's going to be a big debate about this kind of stuff going forward.
When he was campaigning during the 2016 election season, he said the government should negotiate drug prices for Medicare, which was the same policy position as Hillary Clinton. And technically, it's the way the law is written, it's illegal for the government to do that at this point. So it would take an act of Congress to do it. But if we're going to start talking about compromise, the drug companies ought to look out, because, again, you never know what the president might try and do.
Especially as the primary pulls to the left.
And then we've got Elizabeth Warren. She's essentially running for the Democratic nomination. So there's going to be a lot of talk about Medicare for all. It's a great little phrase, but people ought to start digging into what these Medicare for all bills look like, because they rip up the health insurance world as we know it. Coming up, shutdown showdown, the partial government shutdown stretching far into its second week as the brand new Congress is ready to be sworn in tomorrow. We break it all down with RNC spokeswoman Kayleigh McEnany. Next, plus full steam ahead, the Texas Longhorns mascot makes an invalid play on the field against the Georgia Bulldog during the Sugar Bowl.
Run, baby.
I will call the Texas Longhorns a mean name. Coming up, more sports. Welcome back. I'm Dagan McDowell in for Maria Bartiromo. It's Wednesday, January the 2nd. Your top stories at 6:30 a.m. Eastern Time. A rocky start for the new year for your stock markets in the U.S. Futures are pointing to a major sell-off at the open. 322-point loss on the Dow futures right now. That's a loss of more than 1%. What's to blame? Weak manufacturing data came out of China is weighing on investors. The new report showing signs of contraction in China in manufacturing for the first time since May of 2017. That's part of it, but there's a lot of news to digest. A government that's still shut down. We're still trying to negotiate a trade deal or something like a trade deal with China. There's the worry about the rest of the world slowing down. It was interest rates, higher interest rates in the fall that kind of sent stocks tumbling. That's not the case this morning because Treasury yields have fallen to their lowest level in nearly a year. Money is flowing into Treasuries, flowing into safety. That's what we're looking at this morning. 2.66% 10-year yield. I'll point out 2.44% was the closing low on the 10-year yield in January of last year, for the last year. This coming after a tough year for investors, of course, in 2018, the worst year for stocks since the financial crisis in 2008. The Dow, S&P, and NASDAQ all down more than 3.8%. The biggest loser, the S&P, losing more than 6%. Checking the global market action in Europe, we have losses across the board. Shallow loss on the DAX in Germany, down just 0.1%. And in Asia overnight, the Nikkei in Japan was closed, but the other three major markets there sliding. Mitt Romney speaking out against President Trump, and he's not even in the Senate yet. His message to the president. Ahead. Netflix, meantime, blocking an episode of a comedy show that criticized Saudi Arabia's crown prince, Mohammed bin Salman, over the murder of Jamal Khashoggi. We will dig into that and why Netflix is the most interesting company in the world. Maybe. A scary scene in a Florida zoo, a child rescued after falling into a rhinoceros enclosure. We have the latest on that rescue. And then plus a charge on the football field, but not during the game. The Texas Longhorns mascot taking on Georgia's Bulldog. Yeah, it's right, Matt Murray.
Another ugly divide.
I'm gonna hold my thought because we want to get to our top story this half hour, the shutdown and the showdown over it. President Trump inviting congressional leaders to the White House today on day 12 of the partial government shutdown. In an exclusive interview with Fox News' Pete Hegseth on New Year's Eve, President Trump discussed negotiating an end.
I'm in Washington. I'm ready, willing, and able. I'm in the White House. I'm ready to go. They can come over right now. They could have come over any time. I spent Christmas in the White House. I spent New Year's Eve now in the White House. And, I'm here. I'm ready to go. It's very important. A lot of people are looking to get their paycheck. And so I'm ready to go anytime they want. No, we are not giving up. We have to have border security. And the wall is a big part of border security, the biggest part.
Joining me now for reaction, RNC spokeswoman Kayleigh McEnany. Kayleigh, good to see you this morning. What is the outcome, and do we even know that these, particularly the Democratic leaders, are going to show up at this meeting today?
Oh, we don't know if the Democratic leaders are going to show up. Maybe Nancy Pelosi decided to spend an extra day in Hawaii. We'll find out. This president sent an unmistakable message, though, when he stayed in the White House. He was ready to make a deal. He's been ready to make a deal. Very reasonable proposals. He started with $25 billion for the wall, now to $5 billion. Now he says he's prepared to go between $5 billion and the $1.3 billion. So while this president is working and putting forth reasonable compromise, you have the Democrats who decided to take a vacation while federal workers aren't getting paid. So Nancy Pelosi owns this. Let's hope that she comes to the table.
Yeah, but if the shutdown goes on for too long and you wind up the president's quibbling over $5 billion, really seemingly concerned that I'm going to build a wall and Mexico's going to pay for it, that could be his read my lips moment, which you heard from George H.W. Bush before, that, of course, he lost the presidential election in 1992. If this continues to go on, doesn't it fall on his shoulders since he's running the country?
I don't think it does fall on his shoulder because voters are watching and they're observing. What they're observing is this president has said border security is important. It's worth a partial government shutdown, especially when you see Officer Singh, who lost his life out in California to someone who should not have been here. The stakes are real. Americans must be protected. And this president has sent an unmistakable message saying,
I'm going to push back on that because you know what? If the Republicans were worried about sanctuary cities and that omnibus spending bill that they passed through the House and the Senate early last year, they would have taken money away from sanctuary cities. They would have put restrictions on the funding for those sanctuary cities because that is their constitutional power, the power of the purse. And Kayleigh, the Republicans did nothing.
Yeah, it's really important for Republicans in Congress to stand up and stand beside the president. You're right to point out sanctuary cities. It's a big problem. It's one the president has been very vocal about. And there's no greater leader on ending sanctuary cities, on securing our border than President Trump. He is out there on a daily basis talking about this, but we have to have a willing negotiating partner.
Yeah, but he signed that omnibus spending bill. He signed it and clearly regretted it.
And he said that it would not be something that he would do again. He has been an unmistakable voice for border security. Out of any leader we've seen in decades, this president has been the president firmly standing on the side of the American people in securing our border.
Cheryl, I know that you read the Wall Street Journal editorial on this, which we heard on Monday after Lindsey Graham, the senator, met with President Trump. It was an idea floated by the kind of great Trump whisperer in Washington about how to a middle ground and
here's
with
the
the
headline.
Dreamers.
This is what they say, the editorial board. A way out of the shutdown, Trump should trade Dreamer legalization for more border money. I'm not sure that the president, Dagan, doesn't at this point have any choice but to come to some type of deal, because Nancy Pelosi knows she can hold him to those words. You're right. His read my lips moment in the White House with Schumer and Pelosi, they can use that politically. They can use that against him for months. I don't think he's got a choice but to come to some type of deal with them. Yeah. Even if it's $1.5 billion, that's better than zero for a border wall.
Go ahead, Mike.
Well, and Kayleigh, it is true that today the president, or tomorrow, Pelosi and Schumer are essentially going to say we have bipartisan bills on every other aspect of the government but the wall. So let's put that over here and pass everything else as we did before Christmas. That's going to be their counter to the president, to make it all about that. But say, meanwhile, we're not the ones getting in the way, which will be, we'll see how that plays, but that is a logical counterstroke for them to make.
And that idea of just passing something through February the 8th to extend the funding for Department of Homeland Security is something that the Senate Republicans actually voted on. So there is some agreement there. So let's move on to former presidential candidate and incoming Utah Senator Mitt Romney. He decided to write an editorial in the Washington Post for New Year's Day, slamming President Trump. With the nation so divided, resentful, and angry, presidential leadership and qualities of character is indispensable. To a great degree, a president should unite us and inspire us to follow, quote, our better angels, unquote. Kayleigh, reaction.
Yeah, every Republican, including Mitt Romney, should stand behind the president. You look at this president, he has the highest own party approval rating of any president in modern history other than Bush during 9/11. So Republican voters stand behind the president. Republican senators need to do the same. People also forget this president got more Republican primary votes than any.
We have a hiccup with Kayleigh's satellite, but I will point out to the viewers, and if you're listening on the radio, we were showing video of when Mitt Romney had a very public interview for Secretary of State with the President-elect Trump at Jean Jaurès, the fancy restaurant in the Trump Hotel and apartment building in New York City. What is it? You can be the Mitt Romney whisperer.
I guess he's not going back to Jean Jaurès.
What is Mitt Romney doing? I don't.
Well, look, if you're Mitt Romney and you've just been elected to the Senate, guess what? Already, you never have to worry about Donald Trump's support in an election again. You've got a 6-year term. President Trump is up for re-election in 2 years. Even if he wins, he can't be the nominee again 6 years from now. So Romney, I think, is staking out a certain terrain for a post-Trump Republican landscape and starting to lay that track down. Whether he'll get support, whether he'll get any public support is a big question. But it's already a sign, I think, that, look, there's a lot of Republicans who, even if they publicly support the president, privately, they're not such big fans.
But the public opponents, Senator Corker, Senator Flake, they're not there anymore.
Right.
And it looks like Mitt Romney is going to fill the void. I was hoping that the Senate would be a better place, a more warm place for President Trump this time around, but he's got Mitt Romney.
So are you saying that Romney's bumper sticker is "I'm the new Flake"?
That is his.
That's really not going to.
That is Mitt Romney's new bumper sticker.
That's not going to score you any points with conservatives.
Dagan, think about all these old school Republicans that remember the John McCain Republican Party, and I think Mitt Romney goes under that umbrella, and I think we're going to see more of that fight this year.
I want to get to, I think, put it up in the prompter, the Elizabeth Warren video. Was she drinking beer?
Yes.
So Massachusetts Senator Elizabeth Warren announced her 2020 presidential run, and she was on her Instagram, on Instagram Live, doing this.
I'm glad for everybody who's joining this video. It's great to hear from you. Hold on a sec. I'm going to get me a beer. Hey, Robert, my husband Bruce is now in here. You want a beer?
No, I'll pass on the beer for now.
You sure? Come over and say hello to folks.
Yes.
So, this is my sweetie.
Hello.
He's the best.
Wow.
Kaylee is back with us. Your reaction?
Yeah, a sad attempt to try to be relatable to the voters, but Elizabeth Warren has a big problem on her hands. Her own constituents don't even like her. 58% of Massachusetts voters say we don't want her to run for president. So we welcome her. We hope she's the nominee. As President Trump said on Twitter, by all means, become the nominee. I'm happy to take you on, Elizabeth.
One thing I will add, someone who I'm friends with, who is a big old liberal, as my father would say, posted, they added a little GIF of Judge Judy underneath that video of Judge Judy rolling her eyes. So I appreciated that a lot. Kaylee, it was good to see you. Sorry about the satellite problems.
Good to see you.
We will see you very soon, Kaylee McEnany. Coming up, a terrifying trip to the zoo. A 2-year-old girl pulled to safety after falling into a rhino pit. The shocking story coming up. Plus, episode poll, the controversy surrounding a Netflix comedy show after the Saudi kingdom complained about the latest episode.